We start today's market talk. The Middle East burns and the world is paying. The world is paying right now, including us. So the war in the Middle East is 3 weeks old, but its consequences are likely to last years because now the energy supplies are likely to get disrupted. Brent crude is at $100 plus, and that is only talking about Brent crude. Indian crude basket or that thing would be somewhere around 150 plus. And oil and gas fields are under attack. Gas prices are soaring. So in that scenario, things are pretty grim. Now, market outlook. There is a widening gap between physical crude prices and benchmark futures, what they are signaling. Oil markets may be underestimating both the scale of the current supply shock and the severity of the repricing that could follow. So maybe Brent crude at 100 dollars is a myth. It is not adequately pricing the risk. So, physical cargoes in Asia are trading around 130 to $170 a barrel. The core of imbalance is constrained supply, resilient demand, and declining inventories. To bring demand and supply back in line, we need to see prices move higher than where we are right now. I'll again say, because the prices are not adequately high, the demand uh, has not declined. Hence, to match the demand and supply, the prices have to go up. And from where we are right now, an energy shortage will feed into fertilizers, agriculture, industrial inputs, and in agriculture, impact is not fully priced in even now. Impact will be on GDP, current account deficit, and inflation. So we'll have to see what happens. Now, markets no longer expect any rate cuts this year, and US Treasury yields have shot up. Now, let me show you the US yield. This is US 2 year bond yields, right? See, in the last 3 weeks, from 3.4, the 2 year yield, this is the one which actually matters. This has shot up to 4. So that means what? The bond prices are falling. So all those holding US bonds are selling it off. Now this we are talking about US 10-year yield. This has shot to 4.34. And if you remember, this the taco trade in April took place because the bond yield shot up here, and then the Trump went back in March 25, the Liberation Day, when he was talking about tariffs. So actually, it is the bond yields. If they go up, it becomes unsustainable for the US, and then only it brings the uh, conflict to a halt. But the point is, first and foremost, as on date right now, and as per the Fed commentary, etc., they don't expect a rate cut this year. And maybe in case the yields have to, what yields are showing is they have risen so much that there is a rate hike which is anticipated. So I don't know how much Trump cares about US midterm elections. Will it shape the outcome of the war? I'm not sure. Uh, but US GDP growth forecast faces a downside risk, and inflation is expected to be higher. Stress is already visible in their private credit market, which I spoke about last week. And though US is searching for an off ramp to go for a victory, get out of the conflict, but as we have seen in Ukraine-Russia conflict, it is not easy to end wars. Even US wants to even end the war between Russia and Ukraine. They have not been able to do it. So it is not easy. Now, what happens to investors? That is the critical part. Investors have nowhere to go. Higher yields, higher bond yields compress the bond portfolio. That means your bond prices fall. Stock market corrects, and gold offers no respite either. I spoke about gold also last time. I said that people will sell gold now because they will sell wherever they are in profit. So this is what you're seeing, and what we are seeing is foreign fund outflows are expected to weigh on the rupee. So rupee is declining. I'll show you the rupee also. See, rupee last week has declined more than 1%, and roughly in the last 5 weeks, it has declined roughly around 4-5%. So it is heading to 94, and this is despite the RBI trying to control the decline. Uh, Now, next thing would be that India's earning recovery will get delayed. All the companies who are talking about that earning recovery will come in 27, FY27 will get delayed if crude stays at these levels. Under high oil prices, inflation spikes and growth takes a dip. Now, strong dollar amid higher US yields uh, slows down the accumulation by central banks of gold, etc., because now they are more interested in saving their currency. So where do they have the money to buy gold? So it is outlooks from gold becomes negative. uh, and since the conflict has escalated to energy infrastructure, it will take months to normalize and impact. It will definitely impact the global supply chains, and this is the risk which I don't think is fully priced in. So one has to understand that issue, because people are still feeling that there would be a ceasefire by this week, next week, etc. So we have talked about bond yields. We have talked about dollar and rupee. Now this is Indian government bond yields 10-year. So if you see, these yields are also rising. This is from that level of 6.2 uh, from April May last year. It has gone up by at least 50 basis points. That means it is already pricing in two rate hikes, and this is despite the rate cuts by the RBI. So the yields are going up. So market doesn't believe this. Believes that so you can keep cutting rates. Banks will not transfer it to the economy. Banks are not cutting. They are talking about raising rates, because that is the kind of risk which is there. And the other point is India VIX. So if you see here, the other thing which you need to see is VIX. Now it is at these levels. So if it goes up from here, the stock markets which are at a level will decline further. So before talking about FIDI data, let's summarize the whole issue. So the issue is Iran, with whatever firepower it has, is hitting oil and gas sites across the Gulf, while it retains control over the movement of ships through Strait of Hormuz. So that's a fact. Iran, whatever depleted state they are hitting whatever they want and critical targets, and the Strait of Hormuz is under their control. So we can talk about any amount of victory, but on ground they control the Strait of Hormuz. Terms Iran has placed on the table for a ceasefire will not be agreeable to Israel and the US. So that terms which they have placed may not be applicable, will not be agreeable to the other side. Now, Israel is not bothered about impact on world economy. Till the time there is not much of damage or civilian casualties in Israel, they don't care. They don't care about world economy. They will keep bonding Iran. They want to just decimate them. Now, US is self-sufficient in energy, and it seems to me that so it doesn't matter. So if you see the WTI crude is trading at a big discount to even around $14-15 discount to even Brent. So it doesn't makes a difference to them. Trump has either given up or doesn't care about midterms. As it is, Republican voter is behind him, so he can wait this out for longer. So there is no constraint on him to come down. People can talk anything. Now, China has built its energy stockpile. They have adequate reserves and has adequate alternate sources of energy that don't depend on Iran or Strait of Hormuz. So that is another thing. Now, they would love it if US gets embroiled and distracted by never-ending wars, as they have seen in Afghanistan and Iraq, etc. Because at that time, they can continue to invest in technology, defense, and manufacturing and grow their intrinsic strength. Russia is also happy because they are earning good money on energy, and Ukraine receives less attention and ammunition. So they can also continue. So the basic point is that no one of any consequence is pushing for a quick end of war. So how will the war end? I don't know. And Iran's operations do not depend on how many leaders are assassinated. It can continue with asymmetric warfare for a long time. So whether you kill X guy or Y guy, it makes no difference. So this warfare of asymmetric warfare can continue. So this the world energy markets and the equity markets and bond markets will keep bleeding. Now let's talk about India. India is right in the middle of this energy crisis. Hormuz accounts for 60% of India's LNG imports. So downstream impact will be on transportation and logistics and on some factories also which are using LNG. It also, Hormuz accounts for 90% of India's LPG imports. So we will see significant outages across restaurants, hotels, factories, etc. And people are already talking about it. And if war persists until July, forget about April, until July, and the crude stays above 100 odd dollars, then it will have an impact on current account deficit, forex reserves, inflation, and liquidity. RBI has already used adequate amount of forex reserves to protect the decline of the rupee and done lot of OMOs to support system liquidity. So actually, RBI has already done 75% of the OMOs of the total amount of government borrowing this year. So they also have a limit as to how much OMOs they can do. So what is happening is OMO is an open market operation. Now what is happening is to protect the rupee, uh, RBI sells dollars, so withdraws the rupee from the market. So now there is a liquidity problem. So then they do open up market operations where they buy the bonds and government bonds and from the banks, etc., and then put in the liquidity in the system. So now it is also reaching that limit, and that is reflected in our bond yields and the still declining rupee. So the borrowing cost should rise. Equity markets are hit, and because of that, FIs have nearly sold 90,000 crores or roughly $10 billion of Indian stocks since 28th of February when this conflict started. It seems to me that we are too sanguine right now because we feel that Indians can cope up with lot of uncertainty without adequate planning or support. So people are taking it easy. So that is the basic issue. Now coming to FIDI data, if you see, FIs have short on index futures, sold calls, bought puts on index options. So they are strongly bearish. They are selling in cash. So people will say, okay, cash selling has declined. But you see, for a big wholesale selling, you have to need a wholesale buyer. Otherwise, the stock prices will decline drastically. So what is happening is because the DI buying have reduced, so their selling is also reducing, but it is not continuing. Pros, they are long on index futures. They have sold, but they have sold higher amount of calls and bought puts for index options. So that means they are medium term bearish. Clients, they are long on index futures, bought calls, sold puts for index options. They are strongly bullish, and DIs have been buying in cash. So now if you see the FIDI data for the month, see from here, from 27th of February or 26th February, they have been constantly selling. They have sold more than 90,000 crore from this date onwards. Now what happened last week was, so if you see the days FIs turned bullish in terms of index futures and others, the markets went up. And then on one day only, they turned bearish. They sold index futures, they sold calls, they bought puts, and it came down 3%. And they did selling in cash, and that trend is continuing. So till the time this selling continues, markets will keep going down. So every rise becomes an opportunity to sell. Now coming to the US, so if you see, as I have shown you the US bond yields, they are rising. The dollar index went up, it has crossed 100, and then on some remarks, it came down on Friday, but it can keep going up. And this is the problem for the rest of the world currencies. Now, Brent crude is moving up. It went up to that 120 level. And then because of various things, it is declined. But this is not that relevant as compared to what is the actual crude basket for people in Asia. Gold has sold off. So this is just profit booking. So first line of support is around this 4,500 level. And the next line of support will come at this 4,000 level. I think that in case this kind of a momentum of fall continues, then this 4,000 level should be a decent level to accumulate gold, because it fell around 10% just in a week. Similarly, with silver fell 15-16%. So it has breached this $70 level. I think it should go back to 50, but I'm not very keen to get into silver. It is because of the volatility. It is better to buy gold. Copper is also correcting. All metals will correct. I don't know why the metals were going up on Friday, because maybe the dollar was declining. But if the dollar strengthens, then the metals decline. And if in case there is a recession in the world, or the world economy slows down, then the demand for the metals reduces. So please don't try to be long on metals. It is better to stay away from metals, and they are basically trades. Now, Bitcoin, again, it is at 70, but it can easily $70,000, but it can easily sell off in case people need money. So what is happening is crude prices have stayed above $100. Fed held the interest rate steady for the third straight meeting, and it cited uncertainty of Middle East conflict weighing on the economy. Their producer price index came in slightly higher. Core producer price index was also higher than consensus, so the bond yield started going up. US Treasury yields, I have shown you, they are both 2-year, 10-year, etc. are higher, and the US indices corrected, so Nasdaq has corrected. But the point is that US indices will correct less than rest of the world. So it should not be a benchmark. They corrected around 2%. They can correct more, but and Dow Jones corrected slightly more. It is coming to the support. So let's see what happens. Now coming to talking about Nifty, Indian markets. First and foremost, you must understand markets have little tolerance for uncertainty, and in these uncertain conditions, the markets correct. Now, what we have seen is, I'll show you actually in the firstly, let's see this 51 week. So you have to see we made a kind of a doji, but the close was below the last week's close. And what it indicates is that there is aggressive selling at the higher levels, so which couldn't really take the bulls tried to take the market up, but they were selling and it came down. Now, this is interesting. This is 1-day chart. So if you see here, is a falling channel in which the prices are declining. And if you see here, index has seen from the lows, from this lows, we have seen at least 3 dead cat bounces in the last few days, and each has met with aggressive selling at higher levels. And it's a declining channel. So it is always making lower highs and lower lows. So there is no reason to be actually bullish. And it is stuck at these levels right now. So now if you see the hourly chart, so if you see here, it has been declining with gaps. This is the 23,830 level. So it declined to around that 22,950, went up to 23,830, couldn't go beyond that, sold off, and then made a gap till around 23,330 levels, came down, tested the support, then went up again, corrected from that level only. So right now, if you see here, the immediate support is this 22,950. The resistance is this level of 330, 350 levels, where the 20 EMA is also there. So in case this breaches, so if you see here, so if this this level breaches, the present level breaches, then the next line of support would be around 22,000 or 21,800 levels, which was the Liberation Day low. Now coming to Nifty Bank, it has come down to it is seeing aggressive selling, and it closed below the 100 EMA on the weekly chart. So it is still in this rising channel. Once it breaks, then it will fall. And if you see the charts, it has seen a steep decline. It is this autos and banks are the weakest, basically due to FI selling, because they had risen also a lot. So they will sell wherever there are profits. So uh, now here, if you see, this was a support 53,500. Now this is breached. Once this goes, the next support is 52,000, and then once this 52,000 breaks, then the next support is below 48,000. So watch out for these levels. Banks are the weakest. See, they are oversold, so there are slight bounces which are an opportunity to sell. Now the fall this week was led by HDFC Bank because of their issues related to their board and other issues. It is oversold, so it has come to these levels. Once this 780, 760 level breaks, then maybe it can go down to this 680 level in case there is an incremental negative news. But point is, there is no incremental positive news also. So I don't know. Uh, Reliance is holding the market. It is at these levels. So this is the one where people are hiding, and it is not breaking this 1360 levels. The one stock which is in good momentum because of energy issues and requirement of energy, alternate energies, other than oil and gas, etc., is coal. So the coal stocks are doing well. Plus, so it is at 468 odd levels. So this is looking in good momentum. So can be traded at every fall right now, though it is not yet fully overbought, but it's showing good momentum. Uh, so we have seen sell-off in all these, and we'll have to see how it manifests from here. The basic problem is that there is no trigger for the market to go up because there is lack of strength. Hence, every rally is getting sold. So we have to see from these oversold conditions, we need a clear reversal trigger for the markets to go up. Similarly, with mid caps, they also are correcting, and small caps. Now I'll cover two stocks. First is Tilaknagar Industries. It is among the top five spirit players in India with a leadership position in the brandy segment driven by flagship brand Mansion House. Recent acquisition of Imperial Blue is a strategic step that transforms its portfolio, expands its total addressable market, and provides a strong foothold in the largest segment of the IMFL industry, whiskey, wherein Imperial Blue ranks second oblique third in the largest brand in the lower prestige overall IMFL segment. Acquisition of India Imperial Blue entry into helped Tilaknagar entry into a prestige and above P&A segment, and strategic investment in Spaceman Spirits. White spirits enables both portfolio, that is whiskey. Salience increases to 67% versus less than 10% earlier because they were so they're now they are becoming a wider spread of portfolio and geographic diversification, because earlier they were basically South India based liquor company. Non-South salience increases to 50% versus 7% earlier, thereby significantly increasing total addressable market. It is aggressively pushing into luxury segment via Spaceman Spirits Lab, focusing on craft gins and super premium spirits to drive higher margins. Acceleration in prestige and above segment sales led to reviving uh, Imperial Blue, scale up in Spaceman Spirits, and innovations in mid upper prestige luxury IMFL segment will be the key variables to monitor. Risk is uh, allegation of a liquor scam in Andhra. As of March 26, also nearly 93% of promoter shares are pledged because they had to borrow a huge sum of money to pay for the Imperial Blue. Now, as I was referring to it, so Imperial Blue is sold all over the. It's 100%, so it gives them a whiskey portfolio, 100% whiskey portfolio now, and it sells in all parts of the country, regionally wise. While Tilaknagar before that was primarily 93% of their revenue was coming from South, and they were brandy based. 91% of the sales were basically brandy, and others were less. So now what will happening is that they would become pan India player, and the share of whiskey will go up to 67%, and brandy will come to 31%, because uh, South India actually prefers brandy, especially Andhra Bagheera, as compared to this whiskey, which is basically North India issue. So, in if you see in the last 6 7 years, their IMFL sales CAGR is the highest among the rest. That is Redigo, Ketan, Pernod Ricard, which owns this lot of good brands, from whom they have bought this Imperial Blue also, who owns also Blender's Pride, etc. Other distilleries, etc. And similarly, their gross margins have been higher. They are trying to grow their sales by around 13% and EBITDA by 15%. So they are looking for sustained leadership in brandy, superior sales growth, and healthy profitability. Combined entity third largest by volume. So the highest volume sales are United Spirits, then Pernod Ricard, then Tilaknagar, Allied Blenders and Distillers, and then Radico Khitan. IMFL sales, if wise also, they are number three, and with equally strong presence in prestige and above by volumes. Again here, in prestige and above also they are number three, and by sales also. So now their levels have grown up. So now we'll have to see how they execute this. So what is expected is that the combined entity should grow at around 7 to 8% over FY27, and then maybe grow at 8 9% from there. And they, in case they are able to do a price hike, then their sales should grow at around 9.7% in FY27, and slightly higher, 11 in FY28. So we'll have to see the execution. Now the problem is they have high debt on account of fundraise done for acquisition. However, uptick in profitability to support reduction in net debt to EBITDA. So the net debt to EBITDA is around 2.8 times. Now it was 5 times now, and it has come down because they have cleared off some debt, etc. And it is expected to generate good free cash flow. So in case, even if their net debt to cash is around 1900 crore, so if they are generating around 500 400 odd crores of free cash, so that should be okay. But there is not much of change in their net working capital days of combined entity. So they are likely to remain similar. So actually that is a problem, because their receivable days are much more than their payable days, and that is a constraint, and that creates a debt and a cash flow problem. So if you see here, they are expected to nearly double their revenues over the next year, to from around 2500 crores to around 4800 crores. EBITDA is because of high debt, the EBITDA is not growing at the same rate. So even if sales growth is 95%, EBITDA growth is 64%, 670 crores. Finance cost is going higher because of the debt. So they should, but till the time it is below EBITDA, it's okay. There is not much of a constraint. Only thing is that, as I showed you, there's a pledging. So if the stock price goes down, then the promoter gets into trouble. Adjusted net profit are also likely to go up. So EPS is expected to be around 10 or 11, and FY28 15. So taking a mean of 12 13, this stock can is trade at around 400, at around 25 to 30 times earnings. So if you take a mean of 13, the 30 times earning is around 390 out. So 390 400 should be a decent level. Net margins have come down because of the debt and building in a new brand, because their earlier brands were higher margins, and Imperial Blue is not a very popular brand, so they'll have to grow it up. ROEs also come down, so it is now in single digits, so we'll have to see how it grows. And PE is slightly higher, in my opinion. So what is happening is that the stock is consolidating. It can do very well, but there are a few issues. One, if it comes down to around 380 370 or level, that should be a good opportunity. And this Andhra liquor issue can blow up any day, and that will, you will suddenly see 10% down on a particular day. So one has to be careful with this stock. Other stock is Laurus Labs. It is successfully transitioning from a generic heavy business to a more diversified high margin CDMO and specialty player. It is witnessing a strong scale up in CDMO businesses from global innovator pharma, including rare formulation level contracts for patented products beyond API intermediates. It is moving towards rare disease formulations and patented products, moving up the value chain from basic intermediates, advanced technology capabilities, that is ADC, antibody drug conjugates, peptides, massive global demand for, already you would be aware, for GLP-1. So what does ADC does is it targets the antibodies with cell killing power of chemotherapy, and CGT is cell and gene therapy. Fermentation, they produce animal or origin-free recombinant proteins and growth factors used in cell culture media for vaccines and lab-grown meat. So they are doing good in terms of improving their CDMO capabilities. Strong compliance track record, PAI waivers. PAI is pre-approval inspection, mandatory audit by US FDA to ensure a manufacturing site can produce a new drug according to quality standards. So that is positive. Positions it in a strong multi-year, 5 to 7 years growth trajectory in high-value CDMO business with deeper innovator relationships. It has extended its CDMO service in biologic space as well, with 240 kiloliter facility already fully utilized and additional 400 kiloliter capacity investment of 400 crore expected to commence operations in October 26. The Biopharma Shakti scheme announced in 2026 Union Budget, 10,000 crore outlay, is expected to further de-risk its heavy capex in these advanced biologic sectors. It is also investing in a JV with KRKA for setting up 3 billion tablets solid oral dosage capacity and 100 million solid oral capacity for high potent molecules in phase 1. This should be completed by mid calendar year 27. This unit should also have formulation packaging for European and Asia Pacific market. So that is also good for them. This JV is a KRK is a Slovenia company to scale basically finished dosage form capabilities for global market. So if they get an order, they can produce the finished medicine. Now it has been keeping pace with medicines requirement in ARV, that is antiretroviral drugs. These are infections. They treat infections caused by retroviruses like HIV. Uh, it is the largest player in dilute agravir DTG by volume and garners around 200 crore annually from this product. Now, DTG is also basically for HIV infection. The problem is that the high P leaves little room for execution error. So that's why if you see in Q3, their results are good, the stock didn't go up. Now, their CDMO revenue growth has been good. It declined in FY24, but now it is coming up. CDMO mix is also expanding, so that is good. Of the total business now, after the decline, it is moving up. Non-entry retroviral, that is the HIV thing they were making, which was their earlier specialty, is growing better now. So they're showing good growth. FDF is finished dosage forms. Basically turns raw material chemicals and APIs into actual medicine. So they are basically producing actual medicines from raw material for various contracts. So expect a sales CAGR of around 17%. Custom synthesis contribution is increasing. Custom synthesis is where the lab makes a specific chemical molecule exclusively for a client. So this part is the one which is growing best, and others are just declining a bit. But these have highest margins for them. EBITDA CAGR is, because margins are improving, is up. EBITDA is also moving up. EBITDA margins are going better. So expect a strong EPS trajectory over FY25 to 28. So expecting around 20 odd EPS for 27-28, a mean of that, maybe it can go higher. At 40 times, this should be good. Now, if you see here, these are the other CDMO companies. Most of them are, to see PE wise, are expensive, and they are doing well. So we'll have to get into details of each one of them and how they are doing. So present valuation wise, this is around FY28 around 44 times. And right now they are all correcting, so that should be a good opportunity to buy one of them, which has got reasonable amount of EPS growth, etc. Like Anthem, Sai Life Sciences, DVs, Laurus Lab, etc. And there is less of risk. So they are expected to do around 12 to 15% revenue growth over the next 2 years. PAT should be around 959 crore, and in FY27. So they are roughly right now 53,295 crore market cap. So they are roughly around 55 times right now. So slightly expensive. PAT is also expected to grow around 12%, and margins are also slightly improving. So they did a strong growth in FY26. Now from here the growth is expected to not that much. So hence the valuations are coming down. Uh, but here again the problem is of debtor days. So they have a lot of debt. So one has to watch that issue. Now, this stock had gone up to 1120 levels, and after the results also didn't really go to that level. So it is correcting. Uh, I think it should fall to this 200 EMA oblique this 880 level where there is support. From there, one should look, and in a weak market, it is good opportunity to get good, strong companies. And from here, every dip should be a buying opportunity. I have finished. We'll take questions now.